Welcome everyone. We've got a bunch of trades setting up for the month of February. This is our, again, weekly newsletter. It corresponds with our clients' ability to come into our live trading room, which we have two rooms running at the same time. So first and foremost, we have the algo room, which I'll get to in a second, which is absolutely knocking the ball out of the park with this increased volatility or trading range environment we have with the stock market. The 10-day ATR was exceeding 36 points last week, and I'll go into where it is right now and what that means for us. If I may, and I just wanted to go into just sharing this with you real quick. If we get a 4% pullback from the high in the market, it only pulls us back down to around 317 in the SPY, and that's what it says right here. And it's showing, ironically, that while we were making newer highs, we were in a divergence in the McClellan oscillator, and many of you know what our position was and our stance. Now the question begs is, how do you trade this market? Do we position ourselves for the end of the world, a pullback? Well, the two things that I'm looking for is if we actually can trade back above the weekly pivot point, the blue line, correction, let's say, is over. However, that's a long way to go for here. And I think the market has this destiny to fulfill a move back to around that 317. So I don't think the move is over quite yet, despite the fact that the McClellan oscillator shows we're oversold. A lot of times markets in the McClellan oscillator gives oversold readings, but gives better buy confirmation on bullish convergence. So right now, all my indicators, the person's pivots, both daily, in all of the top stock indices generated daily PPS indicators. So why would I buy the falling knife when we've got sell signals, active sell signals, and we can't negate those? So before I get aggressive on the long side, first and foremost, we need to flip back into a positive momentum from a price standpoint. Next, what I am looking for and what's setting up for right now is in a monthly seasonal trend factor for the month of February, and I'm not ashamed of sharing this with you guys because a lot of you YouTube followers haven't seen me in a while. I just wanted to follow up where we're at right now with both what we're doing for the month of February and what we did in January and how we fared in 2019, which was an amazing year for us here at Person's Planet, both for our advisory service, J Person Asset Management, on all cylinders. We're firing off. For this month, this is actually ironic because no one wants to touch oil. Everyone loved it at the end of December. We were long at the end of November. We got out of our XOP. We took profits on our trades. And so now, when everyone was buying it, ironically, we were selling it. And now everyone's selling it. And I'm telling you, you want to focus in on a couple trades here, specifically in oil and gas exploration XOP ETF. And I'll line you up right now with what is setting up is a very strong volume pattern and price. Even though price is making a newer low, we're forming a bullish convergence formation, which is very strong buy signal. We don't have the trigger to go long, but you want to start paying close attention to stocks. I said it at the beginning of the year, which I believe are going to be the best performers in the energy space this year. 1, ConocoPhillips. 2, Occidental Petroleum. By the way, we are actively in a scale-in model of Occidental right now, and we're waiting to see if we can get one more little dip in the market for a pullback in Oxy, and I'll show those price and values in just a second. So you can pause the video at any time, and you can read what all of this means. This is the actions that we took last week. Wayfair is a big position, I believe, in the housing sector, and from a seasonal perspective, gang, housing does very well in Q1. Home builders and anything besides the actual builders, Lennar, Toll, Pulte, D.H. Horton, anything that goes into a home once it's built. So furniture, and that's why I like Wayfair. Online marketing, furniture delivery service is just going to be, I think, a very strong market for 2020, especially as the millennials and that age group and people are buying more things online, and Wayfair certainly has a good following. So Wayfair in here is one of the positions we bought in last week, by the way, on the dip. So we got lucky, and we're holding that position. So from a seasonal perspective, energy and housing and stuff that goes in housing. Now, do take the time to read this because a lot of people were asking me, what about Exxon? just read this out. And I think for an investment purpose, if you have shares and you're maybe looking for some dividend yield income, Exxon might be the spot on weakness, not right here Monday, February 3rd's prices. All right. So what I am looking at is a few positions to just adjust. We were long GE from $10. When it rallied, we put on a put for protection. We took profits at $12.58. Let me repeat. We were long from 10. We did exit Friday at $12.58. Could we have done better? Sure. Am I happy I got out? That was the number we had in our weekly newsletter from a month ago. That was our target. So hook or crook, $12.58, we're out. I got all my family members, friends, neighbors. So if it goes up higher, I think we did pretty well on the stock. What am I doing about it right now? Well, we still have the put option that we had on for as a hedge protection, and all I'm trying to do is on a dip, get the heck out of this thing on the put. The put expires in March. So as a hedge, some would think if the stock goes down, why don't you just buy the stock and use that put for a hedge? Because if the stock goes down and it only goes to, let's say, $12, it's an $11 put. I'm not risking $1 on GE. And number two, it's a March option expiration. So there's not enough time left to offer me any significant time as a hedge of that. So I feel, listen, we banked, we killed it on GE. Let's just get out of it. Everyone loves it now, let them have it. All right, lastly, let me tell you about this other company, Baby Blue, or Big Blue, IBM. I like a bull calendar diagonal spread. I never like to buy a company when a CEO resigns. But Ginny Rometty, in her reign of since 2012, did very well for herself. She got a huge corporate salary. She got a huge parachute exit strategy for retirement. She traveled first class, company jets. But what did she do for the stock? Decimated it. It hadn't done anything. In fact, what she did for this company, she got Warren Buffett to say it's so bad I'm getting out. And so now I think the fact that they acquired Red Hat and now they're coming back into what, by the way, many of you may know this, it was really IBM back in the 70s that created this thing called the cloud. It's not a new thing. It's just a buzzword. And what Microsoft, what International Business Machines, IBM did is they lost their market share, and the number one thing they lost to Microsoft and to Amazon cloud storage. So I think that the new coming CEO has quality that is going to develop that company the way back to where it should be. And whether or not that it's in the right management, there's something about the long-term charts that I see that I love. Huge volume accumulation. I think 2020 is the year for IBM, and it has relative strength performance that beats the S&P right now. Stocks went down, IBM went up, not just because of that announcement of a CEO resigning, but it's been going up over the last couple of weeks. So do pay attention to IBM. I think this is a great trade for you guys. While I do not have any new aggressive longs to put on right now, I don't have any new aggressive shorts to put on either. Why? We've already been in them. And I think at this point in time, we got to start looking at this break as what we're doing in the marketplace. So as far as our performance this particular year, GU is a big trade for us. We still have a free trade. We bought Nordstrom's as a stock, took the money out, applied a 40-50 bull call spread for April expiration. We paid $250 for it. So basically, this is a free trade to begin with. But now that the market is down a bit, Nordstrom's pulled back, we had a little bit of theta decay. Buy back the 50 strike calls and be naked long the 40 strike in Nordstrom. I think that's a very smart way to play it. Also, last week, on Monday, on the lows, we bought in a partial position. I like to do a partial scaling position. No one says you have to get in your whole position all at once. Buy some of the open, buy some of the close, and you'll get the best average price of that session. But who said buy on the open of the same day? Buy on the open, buy on the close of the week. Friday we did not add because of the fact that the market went a lot further and came into a really, really strong shelf of support. I think that support's going to hold. That is the lows that we saw around 160. It was an old resistance shelf. It is now turned into support. A daily close greater than weekly pivot, which is 162, we're adding now safely at lower prices to the 64.69 March quarterly option expiration in the Russell spreads. And we'll probably get this off for about $2.10. So what does that do for us? We're paying $2.10 for a 5-strike wide bull call spread that expires on quarterly expiration. This is, by all measurements, the strongest time of the year for small cap growth stocks. Despite the coronavirus, despite everything else that's going on in the market, I think energy support's down here. It's that time of the year that we look at it, number one. Number two, we are already building up some strong convergence patterns in the energy space, and that should translate well for the Russell, which again is one of the best times of the year to be long exposed to small cap growth. All right. This week, let's see. Biggest thing on our earnings block, Gilead, again, Google after the close today, Spotify, Merck. You got all kinds of names here. I'm not going to give you any more details and bore you to death. What I want to get into, again, is our algo optimizer performance and what it's doing. Now, this is our board. This is our live trading room. And you can see we do have, if you visit our live trading room, you'll get 2 rooms. You can have the main room, which is what we talk about stocks and our current positions from that newsletter. And then we have the algo room, which people can see the trades generate and how, when they get in, what their profit targets are and their stop outs. This is the 5-minute model. This is the 15-minute model. Let me take a second here to show you what's been going on with our trade optimizer. Many of you have the trade algo optimizer. And, last week we got into this kind of really, it had some pretty good trades here. Remember, the settings doesn't trade 24 hours because we're not here 24 hours. It only takes trades for the time, and this is what we built a strategy. It only takes trades when the trading room is open. It only takes trades when we're here. Why? Because it doesn't make sense to have a system run when no one can trade at 3 in the morning or 1 in the morning. So we have this built and optimized out that runs in our live trading room during open outcry session. So all we're asking the system to do is give us the best trade signals that we can, take those signals with defined risk and trade within those parameters and exit any trade at the end of the day. And that's what EOD stands for. So when you come into the live trading room and you say, well, what the hell does all this stuff mean? Real simple. When you see that it gets short and you get a trade signal that, for example, says sell, this red line is the initial stop loss. When the market gets to a certain threshold, that orange line is an emergency stop. So that's number one. Now, these little lines in the sand that you see, these little tiny lines, those are our trailing stop function. So we either have, as you can see, trail stop, this exited out on an end of day. It never even trailed out of any of the positions because it just went into a massive trend mode. Fantastic. We also have another function. It's called max bars. If the market gets near a profit target and nothing happens, it's going to get out with a maximum bar profit objective. And so that was why we saw today, not only was Friday a phenomenal day, but then even today, right out of the box, it picks up a long, it gets out of half the position, trails a stop on and then it exits on a max bar exit. While we're sitting here with you guys and describing an algo system, remember, most of these signals are just based on my work that I've been teaching for 40 years and trading off of. We just put it in so that people could visit the room, see the trades pop off live in front of them, know where their stop should be, and then know how to manage the trade. And that's one of the beauties of this system and our live trading community. The thing that I think is even more impressive for you guys if you're learning how to trade efficiently is, let's say you don't even want to take an algo trade, but here's the thing that I think is the takeaway message that you need to walk away with is simply this. If you feel the market is a sell and you got active long positions in an algo strategy, why don't you wait till those systems flatten their positions out? So it's also used as a phenomenal, not just a trading model for people to make money with, but it's also used as an indicator. Now over here today in the British pound, I can't tell you how proud we are with this model, which popped off 2 contracts, and it did exactly what it's supposed to do, as you can see I'm sharing with you. Friday was no short than a stellar day. Look at what we kind of have built with our model. It gets in, here's your stop, here's the first profit target, it gets out at the first profit target, and then it trails the stop on the balance. And what did it do? Got out on a compression trailing stop basis. Trade over. Next. That was Friday. Pretty fantastic stuff. Today, all right, we don't trade overnight. And yes, there probably would have been a great trade and shoulda, coulda, woulda, and all that good stuff. But let's not look at what happened on paper. Let's look what happened in real life in our live trading room. This thing, who would imagine after this huge decline, who would imagine that the market would not be able to maybe go up a little bit from here? The thing fired off another short. And guess what? I can't understand and I can't explain it. But this is why traders should follow a system. The darn thing went short this morning. The darn thing got out of half. It trailed the stop. And the darn thing did get out on a compression right here. That compression stop is another function of a unique trading tool that is a proprietary model to Person's Planet and our indicators at the Algo Optimizer program. I'll share that with you right now. Format strategies, and you can see what we're using. We're using the 17 version 2, and if I go over here to format, you'll notice this says start time is 7 a.m. plus an hour, 115 minutes. So what is that? Almost 8:50. It's 8:55 exactly. It won't take any trades before 8:55. It won't take any trades after 2:20. 14:25 is 2:25 minus 10. So that's 2:15. And it exits end of the day. So that's the model that we have here. It only trades 2 lots. There's your position calculated method, 2 lots. It has a minimum, obviously we're using a better risk than reward, little under 2 to 1. The thing that I wanted to point out to you is that it has this function of the trailing stop and the scale out function. This scales out a half the position of the system. The rest of the settings that we have here are more proprietary, but what I wanted to share with you is this. It uses the dynamic exit, not my last conditional change by itself. What is dynamic? Dynamic is a function of last conditional changes with a value of ATRs combined. So this way it tightens up the stops. It doesn't use too far away stops like some kind of an ATR function tool, but it has a little bit more modernized approach and functionality with it to tighten our stops up within logic and reason. Now, this model does not use 0 means false, 1 means true. So if it was on 1, you would see that we are using LCCs, but in this case it's 0. This is use compression exit is set at 0. And mainly, I would say the reason why it doesn't optimize well using my compression exit stop, what is that? Well, what this is even more sophisticated. It combines ATR with last conditional change, but as time goes on, instead of getting out at the max bar, what it does is it tightens the stop even more, and it overrides whichever, after so many bars go by, whichever stop is closer, that's the one that it uses. Because over time, the longer the trend develops, more than likely you've overstayed your welcome. And that's why we're able to optimize which stop method should we use. LCCs by itself, combination of ATR and LCC, which is dynamic exit, or the compression, which uses dynamic exit with a time function. Now this little button here, it says ATRs to start. The compression exit, if this was turned on, wouldn't even be activated until we got through 2 average true range values. So if the ATR on a 5-minute bar in the British pound is say 10 cents, it wouldn't turn on until the market already moved 20 cents away from your entry. And then it would activate a compression exit. We don't have to worry about that because that's not what it is. These are the tools that we've designed and trained traders to help build and optimize strategies for automatic systems. And so when you see something and you think, hey, I think this market's a buy, it can't go any lower, and all of a sudden, boom, you fire off 2 shorts, in the pound and you want to buy the dip, think twice. So that's my message, and that's what we're doing here in our live trading community. And everything, as you can see right here, is up on the board. Now, here is the situation with the ES, which was short 2 contracts. It got out of one, and guess what it's doing? You can clearly see what it's been doing. This 5-minute model is unreal. Almost every day we come into the room, every single morning we kick off the day, and it fires off a trade for just, which is all you really need on a daily basis. That's why we have the 5, which is it's compatible with the 15-minute, by the way. So this is the updates of what we've been doing around here. We haven't done a video in a long time. We've been busy. J-Person Asset Management, trading in real life, real time, managing our accounts, our active newsletter, running our live trading room, trying to finish this 2nd edition of the Candlestick and Pivot Point Trading Triggers book. A lot going on. Thank you for listening. Watch for the movement in the energy. I think this week we should get some upside and key reversals in XOP and Occidental. By the way, don't forget to watch for upside breakout in Wayfair. The stock symbol is W. Thanks for listening. Hope you had a great January. Sorry we missed you, but tune in and we'll keep you abreast of what's going on in the markets. And if you want to join our trading community, simply come into personsplanet.com and give us a trial. If you like what you listen to, give me a thumbs up. If you don't like, then tell me why. But you know what? If you don't like anything, just don't watch it anymore. Anyway, I'm only here to help you guys and show what we're doing in real time, and also how we help our traders make better trade decisions. Thanks, everybody.